If you're a stock market investor managing your own money, buying stocks, buying exchange traded funds, I'm going to show you a very simple, powerful indicator that's free to use that will help you do a lot better in the stock market. Hi, I'm Tyler Ballhorn, founder of Stockscores.com, and today we're going to dive into an indicator that I created over 25 years ago to help individual investors really get a better read on the stocks that they own. It's called the Stock Score. And I have a website called Stockscores.com, and I'll walk you through how to use that tool on the website. But let's just dive into a little bit of the preamble so you understand where the indicator comes from. Because when I created the indicator, I was trying to sort of put a score on chart patterns. We know that chart patterns are predictive. We can avoid stocks that have pessimism. We can buy stocks that have optimism. But for someone that doesn't know a lot about reading a stock chart, that's not necessarily easy. So instead of trying to teach everyone how to read chart patterns, I developed a indicator that really takes that skill and saves you time in learning it. So it's called the Stock Score, and it helps us quickly assess a stock and filter the market for stocks that have the best potential. Now the rules are pretty straightforward, and this is for investing, longer term trading, not day trading or swing trading. And so for longer term trading, we're looking at the daily chart, and we're going to use the sentiment stock score. We want that to be above 60. And buy signals come when the signal stock score spikes up above 80. Now, the signal stock score doesn't need to stay above 80. It'll just signal that there's an opportunity to buy. And what I want to do is walk through 3 charts so I can teach you a little bit about chart patterns and how to use this indicator. So let's jump to my website, stockscores.com, and we're going to start with NVIDIA. I'll make this a 1-year daily chart of NVIDIA. And you'll notice that there was a time here when NVIDIA was moving lower, and during that time, the stock scores were low. Now the green line is the sentiment stock score, and the blue line is the signal stock score. All right, so let's just talk a little bit about basics of chart pattern reading. When there are rising bottoms on a chart, you have optimism. We always want to buy stocks that have optimism. We do not want to buy stocks that have pessimism when the tops are falling, because you're basically trying to catch a falling knife. And so one of the components of the stock score is looking for whether the bottoms are rising or the tops are falling or whatever. And so here you can see that when the tops start to fall, the stock score falls as well. And we're moving lower from here onward. Then it starts to creep up right in here because the bottoms are starting to rise. Now notice that right in there, you get that blue line spiking. It goes above 80 and the sentiment stock score is above 60. And the reason is because there's a good chart pattern. We have a downward trend line that is being broken from a rising bottom. And that was a cue to buy the stock. Then the stock went in this long upward trend and stayed strong until right in here, where now you see the signal stock score start to spike downward. Not really giving a sell signal because our sentiment score is still high, but it is showing some cause for concern. Now, some of you may be concerned about NVIDIA because on Friday it had a strong down day, with the rest of the market having a strong down day, but we haven't built any falling tops yet. So although it's somewhat worrisome, until we start to break falling tops and still we start to break the upward trend line, we're not going to get too worried. Now the scores are coming down. You can see the sentiment stock score is high, but the signal stock score is starting to lower because it's recognizing this weakness on Friday. Let's take a look now at Tesla and take some of those same concepts and apply it to Tesla. So we're going to go a 1-year chart. And here you see, let's start with falling tops and rising bottoms. So here's falling tops building, and look at the stock score. It starts to plummet through that zone. And a simple thing that I like to do is put stocks into 2 piles. Is the sentiment stock score above 60, or is the sentiment stock score below 60? And it doesn't matter if it's 64 or 67, it's all about thresholds, above or below 60. And so when it's below 60, it's in the pile of not a great stock to consider. Now again, this is for position trading, longer term trading, the kind of thing you do with ETFs and stocks in your retirement portfolio. It's not for day trading. We have other tools and short-term tools for that. We don't use the stock scores for short-term trading, all right? So when the sentiment stock score is above 60, it puts it in the we can consider pile. Doesn't mean we buy it. It means it's got optimism. The market likes it, and therefore it has greater potential to move higher. So jumping back to the chart of Tesla, notice right in here, we start to build a little rising bottom and then another rising bottom, and look at how the stock score spikes up above 80 on this day right here. And that starts this next move. Now, through this slow period here, the stock score is kind of waffling around neutral. Makes sense, it's kind of a neutral chart. It's going sideways, it's not really strong. And then we break out from this pennant pattern with good volume, and the stock score spikes up because I put points in the score for those things. See, the way the stock score works is every stock starts with 50 points. And we add points for good things like breakouts, rising bottoms, upward momentum, abnormal price action, abnormal volume. All of these things have a scoring model, or are in the scoring model for the stock score, and that's the signal stock score. And then the sentiment stock score is just a smoothing out of that using an exponential moving average of the signal stock score. And what that does is it smooths out so you can generally see, are the buyers winning the war in the market, or are the sellers winning the war in the market? When the buyers are winning, you're going to be above 60. We're going to have rising bottoms. We're going to be maybe moving to new highs. When the sellers are winning, we're in that downward trend. We have falling tops, and it's a stock to avoid. All right, let's look at one more stock, and this is for the Canadians in the audience here. TD Bank, which has been a top performer on the Canadian market. And let's go back 1 year here on this one. So to do that, I just clicked on this little 1Y. And again, this is all free to use. You can go to my website, just punch in symbols. I'll show you how to do that in just a moment. So here we have the breakdown of this upward trend line, and that caused the stock to really get a spike downward. Now we're still above 60 because the momentum is still up, but we had a negative signal on Friday that could break the longer term trend line. So far it's only broken the short term one, so we've got a short term cause for concern, but not a major one. Now notice over here when the stock was moving lower, our scores were below 60. Just putting it in those piles, it was a stock to avoid. And then it starts to break out through here. Stock score starts to spike up above 80, and signal score above 80, and sentiment stock score above 60. All right, so as I said, these are free to use. I encourage you to go to stockscores.com and register for your free account so that you can build watch lists and portfolios and that kind of thing, because that's all free. We do have paid tools on the website, and I'm doing some sessions later in October where I will teach you and do some free classes on how to invest and trade the stock market effectively. Those are free. You can register for those at stockscores.com as well. And in the last session, I'll explain the different options we have for our paid memberships at Stockscores. But hey, I encourage you just to use the free stuff for now. Get to getting used to these indicators. They're great. They've been around for 25 years. I have helped thousands of people do better in the market with these things, and I hope I can do the same for you. Hope you've enjoyed this video. If so, do me a favor, click on the like button, subscribe to the channel, and as always, trade well.